What's up, everybody? Michael Silva here. Yes, the start of November is matching the seasonality script so far, at least for the first trading day. Take a big, deep breath, because that's exactly what we got today. Look at the Russell 2000 heat map is completely green. You're watching the Stock Market Brief Show. Today's video is going to be quick and to the point. I got some positive things to go over. I have some bearish dynamics that I want to discuss just to prepare you for this trading week ahead. Let's get into it. All right, everybody, welcome back. We are now looking at the heat map of the S&P 500. And notice it's something on there is really standing out just a little bit. This guy over here, Tesla. Holy moly, you cannot stop this freight train. This is definitely not fundamentally based. This is 100% a gamma squeeze taking place. When it ends, I don't know. But this is getting absolutely bonkers. Up almost 9% for the day, and this is an over $1 trillion market cap stock. This is crazy. Absolutely bonker type price action. Look at that RSI reading up at 94.2. So if you're wondering why the market was up today, this had a lot to do with it. And if you look at the 15-minute time frame, this thing is just ripping. Just hasn't even connected with the 5-day moving average pretty much since October 12th. And, we're in November now. What's funny about that is we were discussing it back here and this time saying, I even reposted it on Twitter because I took a trade and I got shooken out the very next day before this took off, but the trade was set up horribly. If it got above 800, get ready for this thing to scream higher is what we were discussing. By no means did I think it was going to scream to 1200. That is absolutely crazy. Let's look at the S&P 500. We broke down from this rising wedge and now we're still trading up higher. The S&P 500 finished at all-time highs again today. The RSI is getting up there to that overbought territory, and we're almost reached up to retest this specific trend line that I drew out. If I drew it a couple of ways, some might say that this is the back test, but it's just they're sitting above 4,600. A little bit of a hanging man type candle today. If we drill into the 15-minute time frame, you can see these last few trading days, price action hasn't really gone anywhere too much. It's kind of just levitating and drifting higher. Meanwhile, if you take a look at the VIX, this is kind of that bearish undertone to it, which we have the FOMC meeting announcement here on Wednesday. So be mindful of this, right? Like right now, we'll get into more of the charts here soon, but it's very, very bullish out there. Very, very bullish. And we don't know what's going to come from this announcement. I think we all assume what's going to be coming from this announcement, where basically they're going to start the taper process, hold rates the same. But the markets, we don't know what's going to take place. All we know to be certain is that there's probably going to be a lot of volatility during that time. That's not directional bias. But the VIX here, this is what's interesting. It's been putting in higher highs and higher lows. It was even up today. So just overall, just be cautious. This could be flagging, right? So we could break down lower, a bear flag potentially, but we still have a couple gaps above us that we can get some sort of surprise little shock to the upside, shake out some people before, we reconsider new long positions or so forth. Not to mention, if you didn't watch last market brief, I went over monthly charts and weekly charts. And, I went over these weekly base breakouts on a lot of these big tech stocks. So even if we start seeing the market pull back, you want to pay attention to those big names in the Nasdaq 100 and even the S&P 500 or the S&P 7, I should say. Because if they come back to retest, those could be good key pivot areas to potentially find long positions. Dow Jones Industrial Average, we broke out here all-time highs. We tagged into just above 36,000. Get your 40,000 caps ready, apparently, because this thing just keeps moving up higher. But we did put in a little bit of a shooting star candle. But if you take a look at the 15-minute time frame, once again, it's not making any real advancement. It's just kind of levitating higher with no real price discovery, which is a little bit of a red flag. It could be a period of consolidation, but we have to see, we need to see a little bit more movement in here to really start positioning ourselves long in various setups. If you take a look here on the transports, they make up a big portion of the Dow Jones composite, and we broke out from this downsloping trend line, and now we're consolidating right here. That's actually that's a good sign. Consolidating like this, I prefer over, what I've been seeing in some of the other charts. And it's right around there at that all-time high too as well. So a potential bull flag in the making. The PPO indicator is losing some steam on the histogram. So that's to be, cautious of. And the RSI is a little bit frothy here. Overall, not too shabby though. Nasdaq 100, just once we broke through this down-sloping trend line, this thing has just been screaming higher. Once again, I am not a fan. I would prefer this to take a little bit of a breather, right? Put in a little bit of a hanging man candle. We're overbought again, and we're overbought. How did we get to these all-time highs? Well, a very aggressive move. I would like to see it, but the market rarely gives what you want to see. A period of digesting or even a pullback down here to the 50-day and then be ready to attack. But as it stands right now, this thing keeps levitating higher. And it's really, like I said, just a few stocks that have been just really holding this thing together. Except for today. Today, there was a lot of positive breath in that in the Nasdaq 100. If you take a look at the cues on the 15-minute time frame, there's a possibility here for a rising wedge, but just pay attention to the 5-day moving average. It is sloping up, so the short-term context is still bullish to this day. All right, so Tuesday, maybe it's turnaround Tuesday. Maybe we go down, maybe we don't. But just note that during this time, when there's a possibility for increased volatility coming out with the FOMC announcement, you just need to be, more cautious than usual. Semiconductors also broke out here, which is a very positive sign, including for the Nasdaq Composite, because a big portion of the Nasdaq Composite is semiconductors. How did it get there to all-time highs? Once again, a very aggressive move there to the upside. So I would like to see this thing consolidate. I'd like to see it digest. I don't just like entering in, on a very strong move and then catching it, and then it comes down. It takes 4 days to come down here, and then, consolidates, and then all of a sudden your money's tied up in just a sideways position. It's no fun. IWM. Everyone's been watching this. Everyone's been looking at this. Guess what? We broke out of this trading range. Hallelujah. Oh my goodness. It's been crazy. Is it going to be sustained? That's the question now on everyone's mind. First question was, is it going to break out to the upside? Is it going to break out to the downside? Well, it broke out to the upside. Now everyone's wondering if it's going to be sustained. I think that this would be a sick joke if this thing repped up and then just got completely hammered reverse to the downside. But, this looks strong so far. And given that it's been consolidating for this long, I can see some more strength coming into this. On the lower time frame, which we'll get into, it gets overbought, and how it got here was also very aggressive. But the market rarely does what you want it to do. Good volume on this move. PPO also moving nicely. I don't have the weekly shot here, but the weekly time frame looks like this monster bull flag that's breaking out too as well. But remember, today is the first day of the week and the first day of November. And I will say, based off seasonality, we have seasonality on our side. You should probably be looking at some small cap stocks, because they could very well be seeing more squeezes or rips to the upside. So just be cautious, be well aware of where there might be some more action if you are an intraday trader or a swing trader. IWM on the 15-minute time frame. The last time I showed this chart was this little falling wedge here into this gap. And this is the only one that I said this would probably be more of a hedge long position that I'd be looking at, because I thought there'd be more opportunity. Did I think that it was going to rip like this? No, I did not. I didn't think it was going to move quite like this, but that's exactly what did. And you can see here, we're pretty overbought on a little bit of a negative divergence. I'd like to see this come in, right? That might scare some people because, well, we just broke out. So, perhaps we just get a gap up and go again. That would be strong for small caps. But just take note, we're pretty extended from the 5-day moving average. It's frequently tagged. It has been frequently tagged. So, maybe a pullback into the 5-day moving average could look for a reposition to a long. Take a look at the dollar. Dollar was down slightly on the day, and that benefited, obviously, the S&P 500. You can tell that the Bollinger Bands are still contracting here pretty tightly, and it's still above this 93.50 and still below this area of resistance. It's been consolidating and trading sideways. If we break out to the upside in the dollar, I would imagine that that's going to put pressure on the equities market, at least the S&P 500, perhaps the Nasdaq, the NYA, the New York Stock Exchange. We'll see. But if it breaks down, that can be very, very beneficial for commodities and even the equity markets. Take a look at yields. Not much action in the yields today, but I'm still watching the 3 and 5. We're starting to notice more and more people talk about this. Actually, I'm looking at the Wall Street Journal right here, and guess what? They're starting to talk about it here on the Wall Street Journal. It says, narrow yields gap shows worries on rates. And then it just says, comma, growth. So interesting stuff that, in one of the videos about last week or the week prior to that, we were saying that when we're looking at the 30 and 5 and how this was kind of just heading more south towards the zero, means that it's heading closer and closer to a yield conversion. It's or a yield inversion. It's still far away, but we pointed that out because if it does take place, that's all you're going to be hearing about. So it's good to know, potentially what might be around the corner up ahead. And, perhaps we might see some shock here very soon with what the Fed talks about here on Wednesday, or maybe everyone's anticipating something crazy to happen and nothing's going to happen. Like it's very hard to determine these things these days. Gold up slightly on the day, nothing crazy here, just still trading within inside the last trading day. So can this break out to the upside? Yep. And then we have resistance at 1840, 1850. But it could also break down to the low of the candle, which is 1780, and that could potentially send gold lower. The PPO also is losing a little bit of steam right here, and we might have a bearish crossover. If you take a look at lumber was down almost 5% on the day. If I take a look at the lumber to gold ratio that Michael Guyad goes over, if you haven't watched that interview, you can watch that interview. That is still above zero. So we are paying close attention to this because that could signal a potential which we've been talking about, a risk-off type environment for equities. Doesn't mean that you need to get out of all your equities. What it means is that, hey, maybe you should consider tightening up your stops. Maybe you should consider letting off the gas a little bit on individual, trades, whatever the case may be. One indicator that I'm going to be paying close attention to, ignore all the blue lines. I forgot to remove those, but this is the trend, and I like to look at this when it comes down to this red line and or this green line. When it comes down to the red line, the last time it was here was right there, October 11th, and then just before that, I think it was October 28th, maybe? I can't remember the exact date, but it was right here. And when it comes down to the red line, we talked about that, and then we saw that continued weakness for a little while before it sprint up. When it hit the green line, which was right here, boom, we moved to the upside. So if this gets down to this red line, that I'm going to let everyone know. Try to let people know on Twitter, but I want to tell people about it now. If it does come down to this area, we have excessive bullishness, and it's a time to just be a little bit more cautious in that environment, because we could see some sell side activity or some weakness. The last thing I want to touch on here is the Bitcoin to gold ratio, the Sailor to Shift rotation tool. And this is a very simple tool. I made a video and I showed how to build it and what it is that I do when I look at it. And really, in quick, when this rate of change, the 4-week rate of change, crosses down through zero, that's that sell signal. It doesn't mean get out of Bitcoin or whatever cryptocurrency that you're trading with. But when it crosses down through zero, it is a warning sign, and then I have a strategy in place. But you can see here it crossed down through zero, and we saw some sell side activity. This was a false signal right there and there. This was a buy signal, and if you don't know what a false signal is, you got to watch that video. Apologize, I'm not going to explain it here. Buy signal was right here, and we caught a nice move up. Sell signal, it actually did wipe me. It did get me out of the position right there, but then a buy signal quickly there triggered. And the reason why I'm talking about this now is because the rate of change between Bitcoin and gold is sloping south. And if it crosses down through this zero line, as you can see, zero is right here. Some people look right here and they're like, that's not zero, that says 16. Zero is over here. If it crosses down through zero, that is that sell signal. It does not mean that I would be selling by any chance my Bitcoin. But it does mean that I will be putting a preventative stop in place, and or if you can't place a stop, which I think the platform that I'm trading Bitcoin with, I cannot place a stop. But if price gets down there, I have an alert, and then that alert will alert me, and then I will get rid of my Bitcoin until the next buy signal takes place. So it is heading down, but it's headed down there before. See this big run up right here? Boom. And there was a buy signal that triggered this. Boom. And then it started selling off. That was a big sell off. It got down here, but it did not cross down through zero. And then it headed right back up, boom, and then it sold back down, boom, didn't cross down through zero. It may have, but the week didn't finish their cross down through zero, which is important. And then it moved up, and then finally it crossed. Okay, so that could very well happen, as this is in very bullish context. And if you take a look at this, look at the price action. This is only the first trading day or whatever, Monday, but it's an inside trading day. You have this shooting star type candle. If this starts cracking down this 60,000 level or 57.5, we might see a little bit more increased selling. That's very, very possible. But right now, as it stands, we're seeing a little bit of a consolidation. What I would really like to see, because I'm long, right? I'm trying to catch what this tool does. It helps me try to catch the longer moves to the upside and protect me from the bigger moves to the downside. That's all this is. What I would like to see is get above this 62.5. or above the high of this candle, and then just start seeing some strength obviously come in, because that could turn this thing right back up around, and then we start heading higher. That's what I would like, but we don't know. Another reason why I want to share this is simply because, if you're not part of my Discord group, I posted quite a bit of individual crypto-related equities today, and they look like really strong setups. However, if you take out this BTC USD right here and you replace it with the names that the stocks that I was talking about, the individual equities, you will notice that it works hand in hand with those equities as well. So yeah, although they look like really bullish setups right now, I wanted to put out that warning sign that, hey, if you are in those, hey, and you're paying attention to this, hey, just be careful, be very mindful, because if this clicks down through zero, we've seen the last 3, 4, 5 times that it happened, you also see weakness in those individual crypto equities. That's all I got for you on today's show, everybody. Just to really quickly wrap up, be mindful. Fed announcement comes Wednesday, right? No need to just rush into things and go all crazy because the market's going crazy. We have a breakout in the IWM, right? Unfortunately, you'd wish that the breakout come after the meeting, but that's not the case. But we have elevated volatility, right? So a little bit of a warning sign. Kind of expectations of what the Fed's going to say. So what we'll probably see is increased volatility, some big swings. You want to see what the market plans on doing. Typically, you get a head fake right out of the gate. The market always does what it's going to do. It does the opposite of what it's actually going to do in most cases right out of the gate, and then it reverts. Don't plan on that being the case, but just be very cautious coming through Wednesday and then Thursday to see how the market wants to interpret this news, and then go from there. That's all I have for you on today's episode. Have a wonderful night.